You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 31st day of May, 2023. Final trading day of May. There's an old saying, sell in May and go away. That's really kind of changed over the last few years. Back for quite a few years. Summertime has brought us some incredible opportunities. So we're going to stick around for the summer. So we hope you'll stick with us. Thanks for joining us today, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. First live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. That is our live training room. Now, that broadcast is reserved for members only, those who are taking our 1-week free trial. If you've never taken the 1-week free trial, you can do so right now by going to mytradingiq.com. Scroll down, or no, you don't have to scroll down for this one. At the top of the page, there's a button that says 5-day free trial. Click it. There's no credit card required. We don't need your mother's maiden name. There are a couple of blanks to fill out on the registration form. And it doesn't matter what day of the week you sign up for the trial, because you will still get 5 consecutive trading days with access to everything our lifetime members have access to, except for the members only workshop on Thursday night. So today's Wednesday. If you sign up today, then you'll have Thursday, Friday, and then Monday, Tuesday, Wednesday. You can even sign up over a weekend. We'll help you get your charts set up before the markets open Sunday night. Now, once the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break, and we come back for this broadcast at 12 noon Eastern. This broadcast, unlike the first broadcast, is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways that you can join this afternoon broadcast. Best way is to, and you only have to do this once, go to mytradingiq.com and scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Every trading day going forward, you'll receive an email an hour before the broadcast starts. At 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform, where you will have access to the question box so you can ask questions and participate in the discussion. Of course, there'll be days that you're out of the office, away from the desktop, or you're just busy and can't join the broadcast live. Well, if you're out and about, you can join the broadcast live by pointing your browser to our YouTube channel. And if you're just busy and can't join at all and want to watch it later, then guess what? Just point your browser to our YouTube channel. It's easy to remember. youtube.com/CFRN. That's really the only part you have to remember is the CFRN, because you already know youtube.com. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,200 daily episodes archived for your educational and viewing pleasure. And for those new to the world of CFRN, it's a great way to get to know who we really are. Not just today, but 6 weeks ago, 6 months ago, a year ago, 2 years ago. Just scroll back, pick some days at random. And you'd even have to listen to the whole broadcast. Just, fast forward and see Michael doing the recap, see me doing the recap. You'll quickly see the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. It's not broke. Leave it alone. Now, some will say, well, gee, that's boring. I'm looking for something new and exciting every day. Well, here's a tip. Find someplace else to get your adrenaline rush. Trading, our view of trading, is about building a business. Okay? And yes, that is exciting, to build a business and to see it succeed and prosper and grow, right? But for that to happen, you got to be willing to do the work. You got to be willing to show up every day. So with that said, let's open with a word of prayer, as we do every day. Our topic for the last few days has been discussing how to reset your mind, how to get rid of those toxic thoughts that we all carry, whether we want to or not. Our scripture today is 2 Corinthians 10, verse 5, and I'll share it with you from the Message translation. The world is unprincipled. It's dog-eat-dog out there. The world doesn't fight fair. But we don't live or fight our battles that way. Never have, never will. The tools of our trade aren't for marketing or manipulation, but they are for demolishing that entirely, massively corrupt culture. We use our powerful God tools for smashing warped philosophies, tearing down barriers erected against the truth of God, fitting every loose thought and emotion and impulse into the structure of life shaped by Christ. Our tools are ready at hand for clearing the ground of every obstruction and building lives of obedience into maturity. Again, that was 2 Corinthians 10, chapter 10, and I actually shared verses 3 through 6. Now, resetting our mind, getting rid of these toxic thoughts. Paul wrote about it long ago. He said we have to take those thoughts captive. Priscilla Scher says, taking thoughts captive means controlling them instead of letting them control you. We were created in the image of God, and we are His masterpieces. What would our lives be like if we lived like we believed that was really true? The biggest reason we don't is because we have let toxic thoughts run rampant in our minds. We cannot let them dictate our lives. We must choose to capture our thoughts. Taking our thoughts captive will be one of the toughest battles we engage in. It's so much easier to just entertain the toxic. The effort comes when we engage in the battle. Even if we entertain the thought, can still take it captive. It truly is better to do it late than never. When the Bible says to take our thoughts captive, that means we have the power to do something about it. As Christians, the same power that raised Jesus from the dead lives in us. With the Holy Spirit's help, we can manage our thoughts. Here's an example. Let's say there's someone in your life you need to forgive. Every day you remember what they did to you. You can't seem to let it go or heal from it. You might start to have thoughts like, I don't really need to forgive this person. Or, what they did to me is unforgivable. These are the toxic thoughts you must take captive. Recognize that it is causing you inner turmoil. Then choose truth from God's Word. You might even pray something like, God, I'm choosing to push this thought aside instead of entertaining it. I know you have forgiven me of so much in my life. Help me to extend the same forgiveness to this person. And then you do it again and again and again until it takes. You'll know healing is occurring when you look back on the situation and the sting of pain isn't quite as intense. You will see it as something that happened to you, past tense, not something that is happening to you, present tense. Why is it so important we stop these toxic thoughts? Well, number one, they go against God's best and prevent us from living joy-filled lives. In order to spend our mental energy on things that build up instead of tear down. And number three, so they won't control our minds, which in turn controls our actions. Every day is a new day. We get a new set of hours to live the lives that will bring glory to God and joy to our souls. Just have to recognize and wake up with a newfound determination to be the boss of our thoughts, not the other way around. Join me in a word of prayer. Heavenly Father, we come before your presence with hearts filled with gratitude and reverence. We acknowledge you as the Almighty God, the giver of every good and perfect gift. Today, we lift our voices in prayer, seeking your guidance, strength, and wisdom as we meditate on the words of 2 Corinthians 10:5. We demolish arguments and every pretension that sets itself up against the knowledge of God. And we take captive every thought to make it obedient to Christ. Lord, we live in a world filled with distractions, temptations, false teachings. Our minds can easily wander away from your truth and become entangled in doubts and ungodly thoughts. But we cling to your promise that in you we have the power to demolish every argument and pretension that opposes your knowledge. Father, we humbly ask for your help to take captive every thought that arises within us. Grant us discernment to recognize thoughts that are contrary to your word and to bring them into obedience to Christ. Strengthen our minds with your truth, that we may guard our hearts against the deceptive schemes of the enemy. Fill us with your Holy Spirit, who is the Spirit of wisdom and revelation, that we may have a deeper understanding of your word and walk in alignment with your will. Let your truth be a lamp unto our feet and a light unto our path, guiding us in every decision we make and every step we take. Lord, we surrender our minds to you today. We surrender our thoughts, desires, and imaginations. Take control and transform us from the inside out. Renew our minds that we may be transformed into the likeness of your Son, Jesus Christ. In times of doubt and confusion, remind us of your faithfulness and steadfast love. Help us to find peace and assurance in your promises. May our thoughts be filled with praise and gratitude, for you are our rock and our Redeemer. We pray all these things in the mighty name of Jesus Christ, who lives and reigns with you and the Holy Spirit forever and ever. And everybody said, Amen. Amen. Happy Wednesday. Hope it is a happy Wednesday for you, whoever you are and wherever you are. If you're tuning in via the YouTube channel right now, you already know the title of today's episode. Why copying other people's trades will never make you a trader. We're going to talk about that in a minute. But first, the numbers from around the world. Starting in the U.S. with the cash markets, or the indices as they're called, the Dow is down 264 points. NASDAQ is down 102 points. S&P 500 is down 34 points. And the Russell 2000, our man in the street, down 27 points, over 1.5%. In the commodity basket, crude oil down 44 cents, trading 69.02 last. Gold up $14.70, trading 19.72 last. Silver up 40 cents, trading 23.64 last. That's a gain of 1.75%. Now, when the price of silver moves $1, that's worth $5,000 per contract traded. So a 50-cent move would be $2,500 per contract traded. And at the moment, silver's up 40 cents on the day. So that's just shy of $2,500 per contract traded. In the Asian markets at the close, Nikkei down 440 points, 1.5%. Shanghai down 19. The Hang Seng down 361, almost 2%. And in the European markets at the close, FTSE down 75, 1%. The DAX down 244, 1.5%. The CAC down 111, 1.5%. So that gives us a red day in Asia. It was a red day for the UK. And so far, it is a big red Radio Wednesday here in the US of A. I think the term they've used in the past might be, there's blood in the streets. Well, we've been anticipating a decline. And personally, I think there's a much greater decline to come. This double top that we just put in on the daily chart, that right there may be the beginning. I won't say of the end, but the beginning. Now, today we've come down, we've touched the daily BBC, caught a wee bit of a bounce. Remember, the pullback to the BBC holds more often than not. So before we get into the charts, logic alerts, the concierge trade alerts, all of that, I want to share this with you because it's really important. Now, again, those of you tuned in via the YouTube channel already know that the title of today's broadcast is "Copying Other People's Trades Will Never Make You a Trader." Well, let me explain what I mean by that. Trading in the financial markets can be a daunting task, especially if you're new to the game. Many novice traders often look to copy successful traders in order to replicate their success. However, the truth is that merely copying someone else's trades will never make you a professional trader. In fact, it can become a stumbling block. It can be detrimental to your trading success. The first reason why copying someone else's trades is not a good idea is that you're not learning anything. If your mind is focused on just copying what they do with no understanding of why they're doing it, you're not learning anything. You're simply following someone else without understanding the strategy or the rules behind their decision making. This means that you are not developing your own trading skills, which are essential if you want to become a successful trader in your own right. Furthermore, copying trades can be dangerous because you're not taking into account the risk management strategies that the successful trader has in place. Now, in our live training room, we do teach you about aggressive risk management. And we have very strict and clear rules about risk management. But keep in mind, successful traders have developed their strategies through years of experience and have a deep understanding of the risks involved in trading. By blindly copying their trades, you're putting yourself at risk of losing money if the market goes against you. Another reason why copying trades is not a good idea is that the successful trader may not always be right. Our Logic 247 alerts, there's over 14,200 individual alerts in the alert channel over the last 251, 52 weeks, whatever it is. And we know and talk about it every day that on average, 20% of those alerts get stopped out. Even the most experienced and successful traders can make mistakes. If you're blindly following their trades with no understanding of the reason for the trade, you're also taking on their mistakes, which can be costly. Instead of just copying trades, it's important to learn to understand the strategy and the rules behind the successful trader's decision making. This means studying their methodology, understanding their risk management strategy, and learning how they analyze the markets. By doing this, you can develop your own trading skills and strategies, which will be far more effective in the long run. You hear me say it every day on this broadcast. Our goal for our members is to teach them how to become self-dependent. We want every one of our members to get to a point where they never again need anyone to tell them when to get in or when to get out. You want to get to the point where you can look at a chart of anything: futures, stocks, crypto, forex, ETFs, doesn't matter, and see where the opportunity lies and determine how much risk will be required to take advantage of the opportunity. The bottom line: trying to copy someone else's trades will never make you a professional trader. Instead, focus on understanding the strategy and the rules behind their decision making. By doing this, you can develop your own trading skills and strategies, which will ultimately lead to your success in the markets and set you free. Remember, trading is a skill that takes time and dedication to develop. So don't be discouraged if you don't see immediate results. Keep learning, keep practicing, and you will eventually become a successful trader in your own right. That's why on the Logic 247 alerts, they're sent out with time built in. Not so you can just trade the alert without having to learn how to trade, but so that you can analyze the alert and then go analyze your 30-minute chart and actually see the window of opportunity that the alert represents, so that you'll then be prepared when price reaches the entry point. You'll be prepared to take action with your smaller time frame range chart. The more times you repeat that process, pretty soon you'll start seeing those windows of opportunity yourself. Often you'll spot it before I even post the alert. So use the logic alerts as they're intended, as a training tool to help you learn how to trade, so that you're not dependent on anyone else. The alert comes out, you study that, you go to your 30-minute chart, you see the window of opportunity that the alert represents, and then when price finally reaches the entry point, then you're ready to take action using the rules-based strategy that you learn every morning in the live training room. So, with that said, let's take a look at the logic alerts for this week so far. The latest recap. This morning, at 7 a.m. Eastern, Valerie posted this recap. Since then, some of the trades, the two that were waiting, have resolved themselves, I believe, and I've also issued additional alerts. So later this afternoon, Valerie will update the recap to cover every alert that's gone out today, as well as the two that were waiting. Now, of course, we had a holiday Monday, and so typically the alerts start going out on Sunday night, shortly after the Globex opened at 6 p.m. Eastern. This week, they didn't start flowing until Monday night at 6 p.m. Eastern. Since the markets opened Monday night, we've issued 27 alerts. One never triggered. At 7 a.m. this morning, we were still waiting on two. I know at least one of those has resolved itself. That left us with 24 actionable alerts, of which 2 or 8% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. So over the last 252 weeks, we've now issued over 14,200 individual handcrafted alerts. And what we've averaged is 20% or less being stopped out based on that risk profile I just gave you. The one caveat is you never risk more than the potential profit in the trade. Now, an alert might have $500 of potential profit per contract, or $1,000 or $2,000. But if you plan to get out at the initial target, which is enough to get you your goal for the day, then you shouldn't risk more than that. If you plan to stay into the second target, well, you shouldn't risk more than that. But under no circumstances should you risk more than $300 per contract per trade. If you have to risk more than $300 per contract per trade, then it's probably not a good window of opportunity. It's not a high probability, low risk trade setup. Now, this is where we are for the week. It'll get updated this afternoon, probably around 4 p.m. Eastern, something like that. And it will be posted in the discussion group channels. Along with the logic alerts, we also have our original alert service, the concierge trade alerts. Now they're a little bit different. The logic alerts are based on current price action, while the CTAs are based on historic price action. And when current price action meets historic price action, that's where you'll find some of your best high probability, low risk trade opportunities. Last night, this report was published for all of our members and trial members at 7 p.m. Eastern. So when we go to the charts here in a minute, keep in mind that all members and trial members had these targets for each one of these markets last night at 7 p.m. Eastern. So what do you do with these numbers when the report is posted? The first thing you do is go to your 30-minute chart. And whatever markets you trade, make note of where price is at this time. Okay? It's always going to be between these two numbers. Make a note of that on your 30-minute chart. Then draw a line in the sand at 42.28 and a line in the sand at 42.01. Those serve as great visual cues to help you stay on the right side of the street. Now, if price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You do have to look left to spot potential obstacles, previous swing highs or swing lows, which can become fresh support or resistance. And over time, you have to learn how price behaves around a weekly trading zone. We've published the weekly zones since December 14th of 2009. Our members receive them every Monday morning at 6:15 a.m. Eastern. This week, because Monday was a holiday, they got them Tuesday morning at 6:15 a.m. Eastern. Only 3 things happen at a weekly zone. And as you learn how price behaves around a zone, the zones themselves will become one of the most important tools in your trading toolbox. And as a passport holder, a lifetime member, with no recurring fees, with no upsells and no nonsense, you will have lifetime access to the zones every Monday morning at 6:15 a.m. Eastern. Now, you got to resist the urge to make it more complicated than what I just explained. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, you might be wondering, well, gee, should I use the logic alerts or the CTAs? It's not an either-or proposition. The two work hand in hand. We go to the charts, you'll be able to see that. Now, because this broadcast is open to the public, in other words, you're not a member, you're not a free trial member, you didn't get these numbers last night at 7 p.m. Eastern. So if you want to grab a screenshot, feel free, because we're going to walk through each individual market. Now, Michael will be joining us here in a couple minutes, and he'll do a recap of what happened in the live training room. After that, we'll trade live for 30 minutes on the TradingView platform, and then I will finish the recap of the concierge trade alerts. Okay? But until he shows up, we'll just keep going. Looks like he's still got another 5 minutes before he'll be here. Now, we talked yesterday about price almost reaching the February 2nd high. We've been in a downtrend now, well over a year. The low of the downtrend was put in on this day. How about on this day, October 13th? So the fibs that you see on the daily chart here go from the October 13th low to the February 2nd high at 42.44. 42.44. Okay. So we've come down and we've bounced off the 38% fib, and we've bounced off the 50% fib, and we got back above the 24% fib, and we bounced off of it once, and then we bounced off of it a second time, and we pulled back to the BBC. The pullback holds more often than not. Now, we know eventually price will trade through the BBC because that's what keeps the markets fluid and tradable. Like over here, we had a lag and a retracement. The pullback held. Lag and a retracement. Pullback held. Lag and a retracement. Lag and a retracement. Leg where we failed to put in a higher high. Guess what? That pullback didn't hold. So over here, remember this high was 42.44. 42.43 and a quarter, 42.43. So we got a high, a lower high, and an even lower high. And so now price has traded down through blue and climbing, down through the step line, and reached the BBC, the daily BBC. On the 30-minute charts, you'll see these exact same indicators. Everything we teach and every tool we provide is fluid across all markets and all time frames. That's futures, that's stocks, that's crypto, that's Forex, that's ETFs. It doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, back to support, back to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. So you can see we came down today and we touched the BBC. We expect that to be support until proven otherwise. Sometimes price will actually spike the BBC, but it still hangs on by the close of the candle, whether you're looking at a daily candle or a 30-minute candle or even a 5-minute candle. Okay, so this pullback, while it looked like it might, this was a red candle all the way down. But as we got close to the close of the session on that day, May 24th, buyers came in and drove us back up. And then we had a following day, a doji right on BBC. And then we had a powerful rally that took us up to this lower high, followed by yet a lower high, which has brought us back to support, which so far has held. What will be interesting today is how we close. Will we close above the BBC or will we close below the BBC? If we close below the BBC, then areas of support that you should be looking at are the low of May 26th, the low of May 25th, the low of May 24th, and then the 24% fib retracement. If this pullback holds, and when the market opens tonight at 6 p.m. Eastern for the start of the Thursday session, if we start printing a green candle, well, then we just might go right back up to test this area. So I just showed you where potential support is, where's resistance. High of today, high of yesterday, high of the previous day, and then the high of February 2nd. Everything we do, everything we teach, every tool we provide, they're all based upon the underlying principles upon which markets operate. Those underlying principles will never change. They've been there since the inception of the markets, and they'll be there until the markets cease to exist. So it's now quarter till, so Michael will be here in a minute, but we're going to go ahead until he gets here, and we're going to jump to the 30-minute chart. Now this vertical line separates today, Wednesday, from yesterday, Tuesday. Back over here is Monday. This was the opening candle last night. These are 30-minute candles. The alerts came out at 7 p.m. Eastern. That was on the open of this candle. But we had no thought of trading to the long target because we had the BBC overhead. When price pulls up to the BBC, we expect it to be good resistance. When price drops to the BBC, we expect it to be good support until proven otherwise. When price rallies up to a zone, we expect that to be resistance. When price drops to a zone, we expect that to be support. And so our traders had the short target and the long target, but they knew not to attempt to trade the long target because they're below the BBC. Blue and climbing represents support. So price was literally trapped in this area until about 21:30 last night. Let's go here to 2200. Let's even go here to 2230. Okay. This candle opened at 4208, and over the next few hours it dropped to the target at 4201. That's 7 points at $50 a point. That's $350 per contract traded. When you start out with us, you don't start trading real money right away because you haven't learned the strategy yet or the methodology yet. And a lot of people think, well, I'm just going to copy Michael's trades and I don't have to, worry about all that learning how to trade stuff. That's why I explained to you what I explained to you just a few minutes ago. Okay? That's a folly. Don't fall into that trap. Understand why the market is doing what the market is doing. Understand why we found resistance here, why we found support here, why we knew not to be attempting to trade to the long target because of what the chart is telling us. As soon as blue and climbing rolled over to red and falling, the writing was on the wall. I mean, those who are truly experienced with our strategy might have even entered on this candle, which opened at 4211 and a half. So that would be a 10-point move at $50 a point, $500 per contract traded. And our more experienced traders might have stayed in for price to reach the zone because they understand that the closer price gets to a zone, it acts like a magnet and just pulls price into it. But when this step line crosses blue and climbing, or when the step line crosses red and falling, that tells us the market is most likely going to pull back to the BBC. Michael has arrived, so he's going to give us a recap of the live training room. We're going to trade live 30 minutes on the TradingView platform. And then, when we're done with all that, we'll pick up right where we left off on the recap of the CTAs. Michael?
Okay.
If you're ready.
Grab it. Bring it over here. I am indeed ready. Here we go.
All right.
Everybody should be
Beautiful.
looking at my stuff.
Yep, looks good.
All right. Good afternoon, everyone. Today is Wednesday, the 31st and final day of May 2023. Wow, so we completed 5 months in May already. Well, if you have not taken a free trial with us, now is a great time to get started. Go here to mytradingiq.com. Right here is a sign up for your free 5-day training, 9:30 to 11:30. Click on that. Once you do that, you'll have a little form to fill out. Just fill it out. It's really a simple form. It doesn't really have a whole bunch of stuff in it. You'll see when that loads up. Once you do that, you should go to trading platforms and download whatever trading platform you need to use. Now, I use 2 of these. I use TradingView for my charts, all right, and I use DT Pro to trade. So all the DOMs you see me placing trades on are all on DT Pro, and the charts that you're going to see here in just a few minutes are all from TradingView. You should give us your username for TradingView, and if you have DT Pro or if you have a Ninja Trader, give us your machine ID. Give us whatever information we need to get you set up. All right. If you're going to take the trial, get the trading platform in front of you. All right. You get the most out of the trial if you do that. All right. Spreadsheet. Now, today is the final day of May 2023. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is, I'm looking for something on my desk right here. I can't find it. Okay. Well, anyway, today we made 57 ticks in the NQ, 2 ticks in the Russell. We lost 10 in gold and we made 9 on the ES. That put us at 307.50 on the morning session. Today it took 34 minutes and 10 trades to get to 987.50, and we took a total of 19 trades. Now 987.50 was with 5 contracts. All right, that's not per contract. That is what the total was, gross, not net. Gross after 10 trades with 5 contracts on. That's about $250 in commissions. So you got to take that out of that, right? Just so you know, 10 trades with 5 contracts on is 50 round turn trades. So take it all into consideration. This says gross monthly profit with a net profit is over here. Okay. So I just want to point this out. You know, the things that are constant when you determine commission, one is the amount you pay for your commission, whatever that happens to be, that's a constant. 2 is the number of trades that you take. Those are the 2 constants, right? The thing that you don't know is how many trades you're going to take. That is up to you. You know, if I could have stopped like on these days here where I had my trade after 1 minute, I had my goal for the day after 1 minute and 1 trade. My commission on these days is like 1%. Okay, on 1%. But on a day like today, where it took 10 trades and I was almost at $1,000, but still it was almost 25% today, where it was 1% back here. So the more trades you take, the bigger percentage it's going to be. That's why we suggest quitting when you get your goal for the day. Don't keep trading. That commission rate is going to eat away at you. Unless you're taking really big trades. If you're taking larger trades, well, then the commission is not going to matter anyway because you're not placing a ton of trades. But if you stop trading when you get your goal for the day and you add a contract per month, meaning you earn $2,000 per contract to be able to add another contract, then that will keep you in the green most of the time. Anyway, so we're going to end the month of May. Sorry, this morning took 34 minutes and 10 trades to get to 987.50. We took a total of 19 trades this morning. So we're going to end the month of May up to $8,660. So over 21 business days, averaging $412 per contract per 2-hour business day. Now, $8,660, 385 trades. Let's do the math and see how that worked out. Today was a big month. Well, this month was a big month because I took a lot of trades and I spent a lot of time. So this month, $1,925 went toward commission minus $8,660, $6,735 net. If you took every single one of these trades that I took and you ended up with exactly the same results, and you just used a $5 commission, $6,735 net. Okay, is that hard to take for 6 hours worth of work? That's what it worked out to be, just about 6 hours worth of work. I'm sorry, 10 hours worth of work. 10 hours worth of work. So $673 net per hour on the month. I just want to go over this because there were some questions from some people and there were some accusations from some other people. So I just want to make sure that it's crystal clear. This is gross. This is net, right? So on the year now, we're at $49,705. That is over 103 days, averaging $482 per contract per 2-hour business day. If you quit trading when you get your goal for the day and you had 1 contract per month, you would have only had to work 30.75 hours so far this year, and you would have averaged $1,456 per hour. So this month we averaged about $1,600 per hour, $1,620 per hour is what we average this month. But on the year, you're at $1,456. Okay. Now I am talking. I'm going to have to get into the trades really quick. On gold, we only had the 1 trade today, and it was a stop out. It was early on. So I'll go all the way back here. It's right here. We stopped out on this trade, and we didn't have another trade that we took. We had this pop right here when the news came out. There was some pre-market news, not pre-market news, but 9:45 news, and then we had another pop right here when the other news came out at 10 o'clock. It filled all the gaps today. During the break, we had some decent trades on gold. I think right at the break at 11:30, right here, 11:30, we had a trade here, a trade there. Both of those would have been break even. You could have taken another one here for another break even trade. Then there was one nice trade right here, and there's another one happening right now. And that was it for gold today. The Russell, we had some pretty good trades on the Russell. Let me get into that quickly. Let me see who all is in here today. I don't know who's in here today. I just want to check that out. Okay, so that's funny. People that I was primarily talking to are not here about all that commission stuff. Anyway, on the Russell today, we had, let's go back here. All right, we had quite a few stop outs today. We started out today just like yesterday with 2 stop outs. But our very first trade in here on the Russell was here. Took a break even. Then the next one, we had +6. Then we had a stop out, so we're at -4 at that point. Then I got a small gain. We're at -3 at that point. And then I went from -3 to +2. No, +22. I went from -3 to +22, so I had a 25 tick trade. And then I stopped out and back down to -12, and then I stopped out again somewhere. There were some more trades through here, but I didn't do any of them. I think I was training then. I had one more trade in here that was, it's green, so I must have gotten 1 tick, but I don't think I counted that. And there's another trade in here that I stopped out on that I don't see, but I stopped out on because I went from 12 to 2. Right, so I think I should probably be at 3, but there was another one in here that I stopped out on. I don't know where it was. It was probably right here. This should probably be a red one. This should probably be red. Maybe that's what it is. That would make sense. Okay, and that would put me at 2. And that was the Russell. Now the ES, we had just a couple of trades on the ES. That won't take long to show. We had a break even right there and a +9 right there. That was all that we had, and there were a couple of opportunities in here. I didn't want to do this right in here. I wanted to pull back deeper. That's what I was waiting for. Let me find it to get a deep pullback, but I was talking during all that, and we never got another trade. And that was it for the ES today. Now, we're going to be starting a live stream. I started it late yesterday, so I'm going to try to get to it on time today. Let me go over here and make sure I can get to it. Over here, I can get to it. Okay. That's me disconnecting myself. Okay. On the NQ today, let's take a look at this. NQ, we had, well, yeah, we had a bunch of trades on the NQ. So I'll try to go through that quickly. It's 12:58. Get all the way back here to the beginning. We had stop outs in every market today. Except the ES. We only had the one positive trade on the ES. But we had stop outs on the NQ, stop out on gold, stop out on the Russell. So it took a little while to get the gold today. All right, back here, all the way back to the beginning. This was our first NQ trade. We stopped out -20 ticks. Then we had a break even, then another break even. Then we had a +30 right there to get us to +10. Another plus, somewhere in here, we had another +30 that got us to +40. Then we had a +1. I think this is probably, I don't know where that other +30 was, but we had a +1 to get us to 41. Then we had a couple of break evens through there, another break even. Then we had another +30 to get us to 71. All right, so one of these was a +30 and one of these was a +1. And then we went from 71 down to 51. This is the stop out right here. Went down to 51. Then we had, I was training during all that. We had 1 tick here, we went to 52, then 1 more tick here, went to 53, then 4 ticks here, went to 57. And that was where we ended it with the NQ. Okay, so during the break, there were a few opportunities here during the break, some pretty nice ones. Some break evens, some pretty nice ones, maybe 1 or 2 stop outs in there too. Right now it's given a long trade though. And right now we're about to start the live stream. So let's just say this about that. All right, we finished the month of May with $8,660 a contract. On the year, we're currently at $49,705 a contract. If you've not taken a free trial and you want to, then you just need to go here to mytradingiq.com, click on this. When you do that, you should definitely go here to trading platforms and sign up for the trading platform of your choice. Right, TradingView is what I've just shown you, and DT Pro right here is what you're going to see me trading on starting now. All right, check out the trade rules. Tells you how to set things up and the entry, the risk management, and the exit criteria for each trade. Okay. All right. So it is time to start the live stream, and let me get in there now. Shut that off. Turn that on. And do that. Screen 2. Share that. And start stream. All right. So let's get back here to the charts. All right, and let me move this over so you can see everything. Yeah, right here you can't see. Hang on. slide this over so you can see the whole thing. I didn't notice that yesterday, that you couldn't see the whole thing. Okay, there you go. Now you can see more of it anyway. All right, so here we go. Again, if you haven't taken a free trial with us, just go to mytradingiq.com, sign up for the free trial there. All right, so now we're live streaming on TradingView and live until the bottom of the hour. Okay. Now there was just a trade over here on the gold, but it already went into profit enough to move the stop to break even, so we don't have a trade there. On the Russell right now, this is the Russell, this is the ES, and this is the NQ. On the NQ, we're on 16 tick range bar. Okay, so every bar you see is 16 ticks high, and these other three run bars. All right, so every bar you see on these other charts is 7 ticks high. Now we don't have any trade setups yet. Let me just go here and I'll show you what we're looking for. Okay. The entry rules for the trades. All trades must cover a higher or lower swing. Right? What that means is, the markets are always going up and down and up and down. And so this would be your swing high right here. This would be your swing high. So you have to have a swing high, then it pulls back, finds some area of support. That's where you enter. And then it moves up, exceeds that, continues the trend, and then you get out up here. And you look for another chance to enter when it pulls back. Right? So we're taking these pieces from here to here, from here to here, and from here to wherever. All right, so right now, if I erase all drawings and we go back and look at the charts, we will see that we don't have anything like that right now. We did have something right here, over here on the Russell. See, it went down like this, then it pulled back up, then it went down, exceeded the swing, then it pulled back up, did not exceed the swing high, and it started to push back down. So the entry point was right here, the down close of the bar with the arrow on it right there. That was the entry point. Now that's just the entry part of it, okay? Every trade has 3 parts. Every trade has the entry, the risk management, and the exit. So if we would have done that trade, now I missed it, but if we would have done that trade, then we would have had to go on to the risk management. So it is on a 7 tick range bar. So the initial stop is 10, and that stop trails following the rules, the risk management rules. You would have moved your stop to break even at that point. Right? So you would have been out of this trade at break even. If you didn't take any of that profit, you would have been out of break even. Now the other part is the exit. Right? Every trade has these 3 parts. It has the entry, the risk management, and the exit. So the other part is the exit. So the exit, once you get the entry done and you have the risk management done, then you have to start looking at the exit. So in this case, the exit, step number 1 in the exit, look left for a prior swing high or low. Now because this was a short for the swing low, which is right over here. Okay, so right here is where you're anticipating this was going to go down to. So if you get into this, you bump your stop to break even, then you get a free ride to see if it's going to go down there. Now, one of the things in the lesson plan, that was not me this time. One of the things in the lesson plan today was to go over leg lengths. I didn't have a lot of time to go over them today. But if you look at this leg length right here, let me slide this over just a little bit like this. This leg length right here, it goes from here to here. Okay, now if I slide this over a little bit more, the leg length before that was a little bit bigger. It was from here down to here. So part of the lesson plan today was if the leg length starts to shrink, the pullback leg length, like that one right there, starts to increase like that. That tells you that you're at the end of the trend. You could consolidate here and then continue moving down, but you're at a point where it's not continuing the trend now. Okay. So you want to have something like this where you're going to get out of the trade at break even, or maybe take a little profit and not trade again. You have to know not to trade again at this point. until the trend is continued. Okay. So that's where that stands right now. Now, if I erase all these drawings, you'll see that right now we need this to give us a lower swing to continue the trend. Hasn't done that. Our long-term direction, these outer bands right here on the NQ, you can see they're starting to get, I can slide this over again so you guys can see it a little better. Okay, right here, the long-term direction here on the NQ, they're starting to spread out and move up. We do have a little bit higher swing. Now we have an even higher swing. So what we need now is for price to pull back, get into the ribbon, or for this black line to get down into the oversold area right there. Okay, that's what we need to have happen now. Okay. So we will see how this all comes together. There it is. Okay, so now it's starting to pull toward the ribbon. Now this one over here gave us another arrow. The reason it gave an arrow is because the long-term direction is bearish and we came out of the overbought. But because we didn't continue the trend on this one, we're not going to do anything with this arrow. All right. Right here we have lower highs and higher lows. Right here the long-term direction is flat. So we're not going to do anything with anything right now. The closest thing we have to a trade setup is going to be here on the NQ. Now, you're in here and you have not taken a free trial with us and you want to. If you like what you see right now, we do this every single business day from 9:30 to 11:30 in the morning. All you have to do is go to that link, my trade channel, for the free trial there. What we're looking for right now, this has gotten down into the oversold. So we could get an actual trade setup view. I'd rather see it close down on this bar, get that a little further into the oversold, and this actually hit the ribbon, but I don't think that's going to happen. I think it's going to actually trigger a trade. So if we get an up close on this, now the low of this bar is 86.50, so the high is going to be 90.50. All right, so 90.75 is where you put your buy stop right now. 90.75 is with that buy stop. And there that is. Now that did not end up being a trade. Okay, it did not end up being a trade because down here we did not get oversold. I thought we were oversold on that. Let me just check. Let me check one thing here in the context to make sure that that is set to the right setting. Because I've been messing around with things. Yes, it is. Okay. So we didn't come out of the oversold here. We didn't get into the oversold, so we couldn't come out of it. Undersold. So now the next bar, and up close on the next bar. There it is right there. That's your trigger. Okay, and here it is. That's the trigger. Now this is set to go to break even after it gets 8 ticks in profit automatically. So it hasn't gone automatically. I mean, it hasn't gone to break even yet. And now it's gone to break even automatically, you see. And it also has a 30-tick profit target on it. So I'm just going to lock in 1 tick today for the trade. Okay, for those of you guys worried about commissions, that just paid for my commission right there. And then some. But I'd still be looking for this to put in a higher swing and get up 30 ticks from where it entered. Okay. Now we can see the other markets are starting to move up too. The other indices are starting to move up with it, but the NQ was the first one to go. So we ended up with just a single tick on that. Okay. Now I'll show you again in a minute here. Oops, I didn't mean to put that there. What I meant to put, to click that and put it here, and you get a blue one because I got 1 tick. It was not a stop. Let me show you this. All right, now I already switched it to 6 because tomorrow we're going to be in the 6-month and iron mode, 6 contracts. But the way I have this stop set right here for 16 range bar, what this says is put a 30 point target. I mean a 30 tick target on it. Put a stop 20 ticks away. After 8 ticks in profit, move the stop 21 ticks up from where it was. So that's to plus 1 tick. That's what that says right there. Okay, so I have it all automated with the NQ. Now I have it automated with all of them if I want to use it on all of them, you know, all the different ranges here. But I don't use it on all of them. I only use it on the NQ. The NQ is really fast. The other ones are slow enough for me to do manually. Any questions? Anybody? It is 112. 112. See the long-term direction? These outer bands are starting to spread out on these other indices right here. And the gold is continuing just to go sideways. So right now, you might ask, where is this going? Well, for that, I frequently just refer to a larger time frame and these weekly trading zones that we have, these handy weekly trading zones. Now, on the upside, right here, what it's trying to get up to is the ribbon right here. If you look at the whole day's action, the whole day's action starts here and ends here. So a 50% retracement of the day would put it about right up here. If you were to look at the whole day's action from top to bottom, 50% retracement of the day would put you right here at the ribbon. That's where I would be thinking it's probably trying to get up to right now. Right up here to the ribbon. Okay. So we just have to wait and see. That's what it looks like though. And the ribbon is at 24.94. So if you look left, just to start with, to look left, 308 is probably where the NQ is trying to get up to, the first spot that it's probably trying to get up to. Okay, you all see that? Do you understand it? The whole price action thing that's going on there. If anybody's got any questions, just type them in. If anybody wants to see anything that is not futures related, just type in a symbol. I'd be happy to show it to you. All right, we did put in a higher swing. It's pulling back down toward the ribbon. So we have just about everything we need right here. We need to come back down, either touch the ribbon or get into the oversold. Either one of those would work for us to start to set up the trade. Okay. And we don't really have a higher swing here on the ES, so this is not going to give us a trade. We do have one here on the Russell, so this could possibly give us a trade. The gold is just doing nothing. Steven, I don't know. I don't have. Oh, it is. You're saying it is. You're not asking. Okay. I don't know about that. Steven said it's trying to get through the 200 MA. I don't know what the 200 MA is, but I believe you if you say that. Okay, so we are oversold here again. Which one are you talking about? You're talking about the ES, Steven? Stephen S. We have multiple Stevens. So I have a low on this R. We have 87.50, so 91.50 is what you would be buying on that. Well, not 91.50, 91.75. Okay, it's already got the up close there. That is your long trade right in there. Okay. Let me shut this off. Okay. All right. So on the NQ, I did not get a great fill on that. My 91.75 got filled at 92.75, and it's gone into profit enough to bump my stop to break even plus a tick. So now I have my 30-tick target on this, and it's going to take me out another tick here. All right. So what we anticipate again is that this is going to get up above this high, this level right here. If you go back here to the rules, rule number 1, look left for the prior swing high or low. Then look in the DOM to see if the DOM is showing you anything. The DOM of the NQ, you can only see 10 spaces out, so the DOM's not really going to show you too much. Okay. Oh, you're talking about the NQ, Stephen. Okay, so the NQ is trying to get through the 200 MA is what Stephen is saying. Let me go back here and see what you guys can see in there. You guys can't see all the NQ. There it is. Okay, so we just got another one ticker there. Right click this, make a clone. Put one of those, move it over to here. Why can't I do that? There. Okay. So we want to see it put in a higher swing. Now we don't have a trade here on the ES because it didn't put in a higher swing. We don't have a trade here on the Russell because it didn't pull back into the oversold. Okay. The gold needs to put in a lower swing over here for us to get a trade. It's like it's anything we can work with. All right. It's now 1:16, guys. We only have 14 minutes left, and so far we just had these 2 NQ trades. Both of them worked out. Neither one stopped out. I could have taken more profit than I did on each one. I think this is going to go up to, what did I say, 308, right? I thought I said it was the next level up. Slide this over, grab this, and 308. 8. After we get through the swing high, which is right here, that should be the next level that it should have resistance at, be pushed off of. But the leg lengths, if we go back to the leg we were talking about earlier, these leg lengths are very small. It's not easy to satisfy a leg length. As long as the pullback doesn't get any deeper, then we'll keep having a slow grind up. Okay, just very slow movement up. It's going to walk it up really slowly up to this level. That's what it looks like. Right now, we've got a little bit higher. We're in the overbought. It needs to pull back, give us another trade, and that's what it's doing. If we get a down close on this bar, we'll probably be in the oversold again, and maybe get a bounce off the ribbon. Maybe not. And there, we got the bounce off the ribbon. Right now, the higher probability trade is going to be an arrow off the ribbon. Right, like this one ended up being right here, and this one will be as well. Now, we don't want this to close down right here. Okay, we'd rather have it be a wick and close up. So it's 86 1/4, so it's going to be up to 90 1/4. 90 1/4. You'd rather see that one close up, not down right now. If it closes down, it's going to mess with the structure of the market right here. Okay, and what I mean by that is the whole up, down thing. Remember, you want it to go up and down, then up and down, then up and down, then up and down. But on the down part, you don't want it to exceed that level right there. Okay, you don't want it to exceed that level. If it does, then your pullback's getting bigger than you push up, and that would be a direction change. So that's what we don't want to see right now. Okay. Makes sense? Again, if you guys are in here on live stream, or you're watching it after the fact, or you're in here and you're in YouTube, either current or after the fact, or you go to webinar right now. If you haven't taken a free trial, go to here, mytradingiq.com. Right here on the home page, press that button, sign up for the free trial. All right, if you like what you see. Yeah, I guess I should say that too. If you are not following us, if you're on YouTube, not YouTube, if you're on TradingView and you're not following us and you want to follow us and be notified whenever we do something like this, or whenever I create something new, just follow us, hit the follow button and start following us on in TradingView. Okay. Now, right here, but it's actually given a trade over here in the Russell. What I want to see is I want to see it rise up and come out of this oversold right here. That's going to give us an arrow off the ribbon on the Russell. That's what I'd like to see. Okay, so we got a low on this bar, 44.8. We're going to have a high of 45.6. So put a buy stop on it, 45.7 right there. Get the up close right now on this bar. It's going to trigger us in on the next tick higher, hopefully. Okay, we're not doing anything with the ES right now. We need to put in a real higher swing right here. But the Russell, we're going to try. This one ended up being no trade because the black line right here got into the red. And the Russell, I'm going to cancel the order for right now. Now you see what I was worried about earlier, what I just talked about a minute ago, is happening. Remember, it was going up and down. What did we not want to go down below? Right there, right? It's going up and down, then up. Now down too deep. And now if the up does not go up high enough, then we're going to get a big down. And then we'll be looking to go this way, right? So another thing that you should probably note right now is that the ribbon in here is all crunched up. This ribbon, when it's, you can see all four of them and they're going up like that, spread out, the long-term trend is bullish. When it starts to get crunched up like this, you don't have a trend anymore. All right, up here, and I don't know why it does that. Up here, when it comes back on, hang on a second. Connect on that one. It's just connecting me everywhere. Okay, up here, the long-term trend up here is waiting for it to come back on. The long-term trend up here is getting all squished up together here. You don't want to trade it, right? So you have multiple things saying don't trade right now. The ES, if it came off a higher swing, I'd go long on the ES right here. Now the Russell, this gave us the up close. After all, I didn't do the Russell because, well, it kept shining off on me. But this is a valid trade here on the Russell. Okay, this right back here was also a valid trade on the Russell. You didn't get an arrow on that one, but that was also a valid trade that would have stopped you out to the tick. And then you get this one that should work out. So now everything is looking like it should come together and push up, but I want to see it actually do it before we take another trade. Right, we need to see a higher swing here because we pulled back so deep. We need to see a higher swing here and start the trend over. And same thing here, we need to see a higher swing to start the trend. And this one we have set up, so you could have taken that. It's 123. We only have 7 minutes left, so I don't know if we're going to have any more trades in here, but we'll see. Gold did put it in the lower swing finally, so that continued the trend. So we can take a pullback on the gold. Okay. Over here on the NQ, we continue the trend. The long term is starting to spread out again. The ribbon is starting to spread out again. On the ES, we need to get up above this level. On the Russell, we need to get up above this level. Okay. Anybody have any names? Anybody? Where is that 200 M, Steven? Where's that at right now? I'm sure I could put one on, but so we put in a higher swing, we got into the overbought, and we need that to pull back. Give us another push up. We need to put in a higher swing here and a higher swing here. It's been going on the gold, so that's all good. Now we just need the pullbacks. All right. So we have about 6 minutes left, guys. 5 minutes left. And this right here on the NQ. Sorry, I don't know what I'm spacing out. Right here, the NQ had an entry right here off the ribbon. Okay, you don't have an arrow because this wasn't oversold, so you don't get an arrow on that one. Right, but it was off the ribbon right in here. At 42.96. 42.96 was the spot for that. This needs to put in a higher swing. This needs to put in a higher swing. So right now, we're just waiting for all that to happen and for that NQ to move up. Continue its move up. Okay, that's put in a higher swing as well. The gold pulled all the way back up to the ribbon. Okay, so the gold's actually got a trade going on here. The NQ. Now, I did not get a great entry on the NQ, but you can see it's starting to take off here. My 30-tick target is all the way up here. I'm going to lock in some profit on this one. That's 12. And the 30-tick target is all the way up here. It should go through that 30-tick target right now. If it doesn't before taking me out of plus 12. Didn't have a great entry on that. 98 is where I'm in. 96 is where I should have been in. 96.5. And it just took me out with 12. Okay. 96.5. Okay, so that was exactly where the 200 was. Right in there, 96.5 is what you're saying, Steven. All right, so we just got 12 ticks on that one. Now we need this to put in a higher swing and this to put in a higher swing to get another trade in those. The gold actually pulled back and gave. It's starting to give a short look over here. It's not in the overbought, so you're not going to get an arrow out of this. This was an actual trade right here. If you consider this a lower swing, one tick lower, if you consider that a lower swing, then that was an actual trade right there. No, I didn't do that. I didn't do the Russell. I didn't do that. So I wouldn't trade the NQ. So we did get a higher swing here, and we would have gotten all 30 ticks had I let it run. We did get a higher swing here. We don't really have one here on the ES yet. We have 3 minutes left, so there's a chance we could get another trade here. There's a chance. Just looking around, see if we got any more questions. I don't see any questions coming in. If you're watching this on the live stream and you have any questions or you want to see any other symbol, just have to let me know if you want to be. Right. If you're not following us yet and you want to be you want to be notified whenever we make a change to any of our, make an addition, you can see I am working on some things here. These bar colors right here. That's something I'm working on. When it turns blue in the long-term direction is bullish, and when it turns green in the long-term direction is bullish. Or when it turns red in the long-term direction is bearish. I don't really have any red here on the NQ that you can look at, but if I blow it up. Okay. Yeah, over here, long-term direction is bearish, the bar turns red. Okay. Something I'm working on. There's some other components to it that I'm trying to get just right. And I think when I do, everyone who is involved with us is going to enjoy it, be able to profit from it. So if you're not hooked up yet, take the free trial. Go to mytradingiq.com and sign up for the free trial. Right? It's really pretty simple. Right here, click that button. Yes, David W. More stuff. Got the higher swing here. That's pretty nice. We have not really a higher swing. We have it on the Russell. So the Russell was a great trade from here. The NQ gave us every trade that the NQ gave us was a good trade. Right? The 3 trades that it gave us in this session. All 3 of them were good trades. The one Russell trade was a good trade. The gold, I kind of wanted to wait for the arrow off the ribbon on that into the overbought. And now I wanted to put in a lower swing. It's only lower by like a tick over here. All these are starting to move up. Now you see the ES. The ES has put in a higher swing now too, finally. So this is good stuff. What was that number that I gave you a little while ago? On the NQ, we already went through it, right? It was 308 right here. There was another number that I gave you a few minutes ago too. Let's go see if we can find that. Here it is. It was a 50%. I said get up to the ribbon, but it was a 50% retracement of the full day, which puts you right here. Right here at the ribbon, 31. Okay, that was the other number that I gave you a few minutes ago. And we're just about up there right now. There we are. We're up there. Ding, ding. That is it, guys. Well, if you like what you see here and you want to do it every day with us, go out, sign up for the free trial. mytradingq.com, sign up for your free trial right here. If you're going to sign up for the trial, give us your TradingView ID, give us all the information you need to give us so that we can give you all the indicators and stuff so you can have this stuff on your desktop in front of you. Okay. I didn't go through the spreadsheet, but today we finished the month of March up $8,660 a contract. And on the year now, we're at $49,705 a contract. That is one contract, 2 hours a day. Right? Again, the goal is not to trade all day long. The goal is to trade just as long as it takes to get the goal for the day and then quit trading and add a contract a month. So if you did that so far this year, you would have averaged $1,456 per hour for 30.75 hours of work. Right. Back here, we need to pull back here, and a pull back here. That is where I'm going to leave it. All right. Everybody who came into the live stream today, thanks for coming. Everybody who continued to watch through all the other streams, thanks for watching. I'm going to stop the live stream right now. Okay, that stream is ended. And now we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Here comes Dwayne. Almost.
There we go. Good job.
Right, there you are.
Recap of the morning session.
Today, 34 minutes, I think, is what I have, right? Is that right? Yeah, 34 minutes, 10 trades. $987.50.
Good job.
Okay. Thank you.
Okie doke.
All right.
And we will pick up, guys, where we left off. We had made it to the ES 30-minute chart. We already covered the daily chart. And if you're tuning in late, you might have missed the part where we took a look at the recap so far today. This was as of 7 a.m. Since the markets opened Monday night because of the holiday at 6 p.m. Eastern. As of 7 a.m. this morning, we'd issued 27 alerts. One never triggered. Still waiting on 2. That gave us 24 actionable alerts, of which 2 or 8% would have been stopped out on the risk profile I explained at the beginning of the broadcast. If you missed it, good news is you can always, this afternoon, about 2 hours after the broadcast ends, go to our YouTube channel, youtube.com/CFRN, and there, along with 2,200 plus other daily episodes, you will find today's episode. Now, some of you who are new might not know exactly what a logic 247 alert looks like. So I shall show you real quick. Okay. Now, these are the ones that were posted today after Valerie did the recap. When she redoes the recap this afternoon, these will be included. So we had a long on bonds. By the way, we rolled bonds forward to the U contract. When you see the Z's, that means never triggered. This was a long on gold. B is buy, T is initial target. BR is potential resistance or second target. And then there's a final trade to target on every alert. If it's a long, it'll be the weekly trading zone above. If it's a short, it'll be the weekly trading zone below. S means sell. T means initial target. And then WTZ is the final trade to target. This one was still one of the ones we were still waiting on. We had a short on the NQ yesterday, short on the Russell. This is another one that was waiting. We had a short on the Dow, short on the ES. See, sometimes there'll be, there's your initial target, gives you a goal for the day, then a second target, then a third target, then the final trade to target. So short on the ES here, long on silver, long on gold, short on crude, short on the NQ, stop out on the Russell, short on the Dow, short on the ES, and then going back to Tuesday, we had a long or buy on the bonds, short on the euro, short on silver, short on gold, long on crude oil, long on the NQ, another stop out on the Russell, short on the Dow, initial target, second target, third target, fourth target, final trade to target. Short on the ES and long on the ES, and that takes us back to Monday night at 6 p.m. Eastern when the markets open. Now, I didn't start until 7 p.m. Eastern. The time you see reflected here in Telegram is my time zone. I'm in Phoenix, but we don't do daylight savings time. So 8 months out of the year, we're on Pacific time. Okay. If you look at the same thing and you live on the East Coast, it's going to say 7 p.m. If you're on Central Time, it will, whatever the clock, Telegram, the messaging client that we use for a lot of stuff. We have about probably 10 different channels. Telegram itself reads the clock on your computer, so it's always going to display things in whatever time zone you happen to be in. Last week, we had a total of 62 alerts, 15 never triggered, gave us 47 actionable alerts, of which 6 or 13% been stopped out based on the risk profile that I explained earlier. Now, we're in the process of going through the concierge trade alerts, which are different. It's not an either or proposition. The logic alerts and the CTAs work hand in hand. I already covered all of the instructions up here. So, again, you can later today go to the YouTube channel, youtube.com/CFRN, and you can hear me explaining all this. But I'm bringing it up now so that anyone who is not a member or free trial member, you did not get these targets last night at 7 p.m. Eastern. Only members and trial members got it. Which is why you should either take the trial or become a member so that you get them. If you want to grab a screenshot, you can, because we're going to walk through each one of these. We've already started on the ES. In fact, kind of completed the ES. Market opened here. We were never tempted to trade the long target because we had resistance overhead. Pull back to the BBC, holds more often than not. So, but blue and climbing right here, whereas red and falling is bearish, blue and climbing is bullish. So price was trapped between resistance and support. Finally, price got below support, turning blue and climbing into red and falling. So an entry, even here, at 42.08, gave you a 7-point move down to the target. At $50 a point, it's $350 per contract traded. Now, when price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support, until proven otherwise. When the market finds support, it's going to go look for resistance, which it found at the BBC. That just stands for bull, bear, cross. When price gets above the green line, we're bullish, we anticipate higher prices. When price gets below the green line, we're bearish and anticipate lower prices. So on short trades, we want to be below the BBC and have red and falling. On long trades, we want to be above the BBC and have blue and climbing. But that never happened here. Market found resistance and went looking for support, which it found at the weekly zone. Bounced us back up to resistance at the BBC, which sent us back down looking for support, which we found again at the zone. These are 30-minute candles, once, twice, 3 times, and then we consolidated. Price reached up from support to find resistance, and then came the drop, which took us to the next weekly zone. The zone is 4172/73. The low was 74. So we came within a point of getting to the zone. Zones are an area. 72/73, 95/96, 43/44. So in order for us to think about trading towards the long target, we would need to see price get above this zone. We're above the BBC, but we need to close above the zone. And then I would want to see price take out this high, and this high. And then I would trade it as a window of opportunity from roughly 42.12 up to 42.17, that's 5 points. And then from 42.19 up to this high, 42.22, that's another window of opportunity. And then from there up to where the bearish cross took place, create another window of opportunity. Then, of course, if price were to get above the long target, then we would trade that up to this little triple top here. And if we get through there, all the way up to the zone at 43/44. We trade every market exactly the same. We're not teaching you how to trade a specific market. We're doing something far more important. We're teaching you a life skill, how to trade. Once you understand how to trade, because you understand how price flows the same across all markets and time frames, and you understand how to read a chart and understand what it's telling you, okay, then you're able to find your own trade opportunities any time of the day or night, as futures trade around the clock. And we want you to get to the point where you don't need anyone to tell you when to get in or when to get out, because you've learned how to do it yourself. And that's something that once you learn, nobody can ever take it away from you. And once you understand how to trade, not just how to trade a specific market, but how to trade, you can trade futures, stocks, crypto, Forex, ETFs. It doesn't matter, because price flows the same across all markets, all time frames. So we have to expect resistance here until proven otherwise. Well, what does that mean? Well, it means that a 30-minute candle closes above the zone, another 30-minute candle opens and closes above the zone. Now it's official, and so now we're looking to trade to the upside. If this becomes resistance, then we'll be looking to trade back down to the zone below. It's almost like those paint by number kits we used to get as kids and make those horrific monster pieces. At least, well, maybe yours looked great. Maybe yours looked like the cover on the box. Mine never quite did. Always had a trouble coloring within the lines. So we'll work on that. The Dow. Remember, the vertical line separates today, Wednesday, from Tuesday, from Monday. Here's where we opened last night. Price got below the BBC. No thoughts of going along because blue and climbing, even though price did sit for 30 minutes with a green candle, just sat on top of the BBC. It never pulled away. It's got to pull away, okay? And when blue and climbing, although that's bullish, when it gets directly above price, it becomes resistance because it's usually on its way to becoming red and falling. And so as price came down, we hit the target and then some. In fact, the support we found here is directly related to the support we found yesterday. Put in a little double bottom. Now the black line is called the step line. When the step line crosses red and falling, that's an indication that price is going to attempt to pull back to the BBC. That's exactly what it did. Then we ran into resistance at the zone. Now, the zone is 33.025/030. So while we spiked it, we never let go of the zone. Remember, it's 25/30. So these candles were still touching the zone until price breaks away from the zone. that magnetic pull is going to keep it in this consolidation mode. Only 3 things happen at a weekly zone. 70% of the time, what you'll see is just this right here, consolidation. As the market makes up its mind, is it going to shoot for the zone above or the zone below? Price is always trying to reach a weekly trading zone. From the minute the markets open Sunday night till they close Friday afternoon, price is trying to get to a zone. If it's above the BBC, it's trying to get to the zone overhead. If it's below the BBC, it's trying to get to the zone below. So we consolidate, and price drops below the BBC. Price blue and climbing turns to red and falling. And so we come back down to the target again. That serves as support, which bounces us up to red and falling, and the BBC, which we expect to be resistance, times 2. And it was. So that sent us back down to the target, back down to the zone below, where the market found support and consolidated. Remember, 70% of the time, consolidation. 20% of the time, rejection. See, this was a big red candle all the way down to the zone. But by the time the 30-minute candle closed, the only thing left touching the zone was the wick. So that's what we call rejection. And then 10% of the time we get what's called the slice. And when I come across an example of that, I'll point it out. So we came down to the zone. First we hit the target. Then we hit the target again. And then we came down to the zone, found support. The step line crossed red and falling. So we pulled back to the BBC. Now, even though we've spiked the BBC, there's still 11 minutes left in the life of this candle. So where this candle closes is very important. Does it close above the BBC or below? Or does it close right at it? If it closes right at it, then we could consolidate for a bit at the zone. If the market should take off to the upside, we want to get above this swing high right here. And then over here, you'll see there's a bearish cross. That's when the red line drops below the green line. Whenever you have a bearish cross that leads to an extended move, the first time price revisits that area, it will almost always be resistance. Not every time, but almost always. Same's true of a bullish cross. Okay. The bearish cross has to lead to an extended move, which that is. And so one might argue that ran out of steam ahead of this resistance right here. But again, there's now 9 minutes left in the life of this candle, so where it closes is really important. Also notice what's happening down here with red and falling. It's starting to curl underneath price, which means it very well may be on its way to becoming blue and climbing. If it does, that represents support. So you would have a small window of opportunity here where if price gets below the step line, you could trade it down to blue and climbing, or you could go look for a better opportunity on a different market. The Russell. We opened below the BBC. Blue and climbing turned to red and falling. And down we go to the target. And then to the zone, which we expect to be support, and it was. It sent us all the way back up to the BBC. We spiked the BBC, but we never pulled away from the zone. Then we dropped back below the BBC, hit the target, hit the zone, consolidated. I see price was rejected. Yeah, the zone's actually 61/62. So it really wasn't rejection. It was just consolidation across here till we started to move higher. We come back down to the zone, consolidate, and then right here, this is the opening candle on Wall Street. The 9:30 a.m. Eastern to 10 a.m. Eastern candle is usually, most days, the biggest candle of the day. Unless there's some kind of economic report, like a Fed announcement coming out in the afternoon. Sometimes the 10 to 10:30 candle will be big as well, because often important economic reports are released at 10 a.m. Eastern. Our recommendation, whenever there's an economic report coming out, especially a high impact report, is to be flat. Let the news come out. Let the market participants absorb the news, whatever it is, good or bad, and don't trade the initial impulse, but trade the follow-through of the initial impulse. And these are all things that you're not going to learn overnight, okay? Remember, I said, if you want to become a trader, you've got to be willing to do the work, show up every day, ask lots of questions, and learn how to trade. The good news is our rules never change. It's the same day after day after day after day. On the YouTube channel, youtube.com/CFRN. And by the way, when you go there, if you haven't clicked the subscribe button and the bell, please do. This way, whenever we go live, you're notified. Okay? So, on that opening candle, we get a huge green candle that looks like it's going to go to the moon, but it reaches this swing high from yesterday and falls apart. And then we did have some econ come out, I believe, at 10 a.m. Eastern today. They created this big red candle where we consolidated. The step line crossed, red and falling, and we're pulling back to the BBC, which we expect to be resistance until otherwise. Okay. In Q. Here's where we opened last night. Ran right up to the BBC. It was good resistance. Price got below, blue and climbing. Blue and climbing turned to red and falling. And an entry even on this candle. 14,385 took us down to 14,342. That's roughly an $800 per contract. Support, which was established yesterday, kicked in right here. Okay. Support always sends the market looking for resistance. Resistance sends the market looking for support, which it found right here. So we had this little consolidation area here. Now, that's going back. This is Wednesday. This is Tuesday. This is Monday. This would go all the way back to Friday. Yeah. Okay. But that little area became support. Now, there's people that'll tell you, oh, you can't trade support and resistance anymore. That's horse and buggy stuff. Dude, there's algorithms and indicators and oscillators out the yin yang, right? And as we talked about yesterday, probably the biggest mistake new traders make is loading up their charts with all kind of indicators and oscillators that conflict with one another, or the biggest rub is that they're displaying the same information just in a different format. So you think you have two things confirming that you should go long, when in fact you only have one thing, because those two things or 12 things are all measuring the same thing. But that indicator is displaying it differently. So you might think you have 4 things telling you to go long or short, but in fact, you only got 1 thing. So if you missed yesterday's broadcast, I highly recommend that you listen to it. The title of yesterday's episodes is Why Too Many Indicators and Oscillators Can Hurt You Rather Than Help You as you learn how to trade. That's why my charts are so bare bones. Okay? There's only a few key things I need to know to make a well-informed trading decision. I've got, you've seen those screens that people have, they post pictures of. It looks like a bowl of spaghetti. And I'm not interested in that. I just need to know a few key things to make a well-informed trading decision. This is a business based on probabilities. All you should be trying to do is put the probabilities in your favor. It's called a definable edge. Once you have a definable edge, now you're ready for trading perfection, which Mark Douglas in Trading in the Zone defined as knowing what to do, when to do it, and then just doing it. Okay? So if you missed yesterday's broadcast, probably about 15 minutes in, I talk about that subject in depth. And the other thing it does is it can cause your charts to lag. And you've got all these different indicators and oscillators. Whatever computer you have, it only has so much computational processing power. And every indicator and every oscillator eats up some of that processing power. So pretty soon your charts start to lag the actual market because your computer is trying to compute all of this stuff and keep up with price. And at some point, this isn't happening. So where are we now? Red and falling's turned to blue and climbing on the NQ. Of course, we did come down. We hit the target, ran back to the BBC, hit the target again, go back to the BBC, drop to this area. Now we've gotten above the BBC. Now this candle opened above the BBC. If it also closes above the BBC, then we start looking for windows of opportunity on the long side. Something like that. Or that. Or that. You got to overcome this resistance, and then you want to take your profits before you hit this potential resistance. From 450 to 480, that's 30 points. At $20 a point, that represents $600 potential per contract traded. But again, all we've done is spike the BBC. We have opened above. Now we need to see this 30-minute candle close above. And then we need to see price take out this swing high. And we're able to trade this area, 372, up to 392. 20 points, $20 a point, $400 per contract traded. Price takes out that high, you trade it up to this high. Take out this high, trade it up to this high. Take out that high, trade it up to that high. See, trading's not easy, but it can be simple. if you have someone to teach you how to do the job. 9 out of 10 traders fail for that very reason. They don't have anyone to show them how to do the job. Read all the books in the world, watch all the videos in the world. That's no substitution for having a teacher in an interactive environment, taking off trades live in real time, explaining every move they make, every trade they take, the rule behind it, and answering your questions all at the same time. That's the best way to learn how to trade. I don't know of any other way, to be honest. Now, if price were to see what's happened, that candle's turned red. So this 30-minute candle may end up closing back below the BBC. Okay. So we're thinking short again, right? Well, yeah, but step line is potential support. Blue and climbing is now potential support. These lows are potential support. So there's your window of opportunity down there. This zone is 220/221. So from 44 down to 24, 20 points, $20 a point, $400 per contract traded. See how I'm analyzing every market exactly the same. Doesn't matter which futures market, or stock, or crypto, or Forex, or ETF. My analysis is consistent because price flows the same. Crude oil. Here's where we opened. We came down to the zone, and what do we expect when price drops to a zone? Support. When it rallies up to a zone, resistance. Drops to a zone, support. 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 Resistance. We finally drop below the zone. We get one more retracement back up to the zone. And then we make the drop that takes us to and through the target, all the way down to 67.03. This is our lowest weekly trading zone this week for crude. So we've already traded below, by Wednesday, the lowest weekly zone. However, by close of business on Friday, we expect price to be at or above the lowest weekly trading zone. Now there's a huge window of opportunity right here. Let's call it 68 bucks down to 67.40. That's $600 per contract traded. Earn the right to trade 10 contracts at $6 grand. You do not start trading real money when you become a passport holder, because you haven't learned the strategy yet. Haven't learned how to read the indicators. The 24/20 blueprint's going to walk you through the process of putting together 10 consecutive days in a row, your demo account, where you reach your goal, 10 trades or less. Once you do that, the blueprint will give you the green light to go live with one contract. Now that first contract is going to be funded with your startup capital. Your goal now is to increase your account balance by $2 grand. Once you do that, the blueprint will give you the green light to add a second contract. The first contract was funded with your startup capital, but number 2 is funded with profit you earned in the market. Blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. That's why it's called the 2420 Blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. No get rich quick here. Teaching you to build a trading business. Okay. So, even though we're below the weekly zone, lowest weekly zone, we could look back at last week's zones. And last week, we had a zone down at 66.50. Right here. Is it possible we could revisit last week's zone? Absolutely. In fact, the market just might do that. And then begin a 2-day climb to get back to this zone. Now, I did say that by close of business on Friday, we expect price to be at or above this lowest weekly zone. Does that happen 100% of the time? No. Does it happen far more often than not? Absolutely. 100%. Absolutely. It doesn't happen every time. More often than not. Gold. Here's where gold opened last night. Came down to the zone, found support. Got above the BBC. Red and falling, turned to blue and climbing. And off we go. This candle opened at 77.5. Let's call it 78. And $400 per contract up to the target. Then we got back below the BBC, but before we can start thinking about the short target, we've got to pull away from that zone because of its magnetic property. We never pulled away. We then got back above the BBC. Red and falling, turned to blue and climbing. This candle opened at 70, ran to 82. It's $1,200 per contract traded. I'm sorry, 78. I don't know, what was I thinking? It's opened at 77.7, but we'll call it 78 to be conservative. 78. It ran another 4 points, or $400 per contract traded to the target, and then it kept going. And if we scroll back, we can see why it stopped where it stopped. Silver opened here, came to the zone, found support, consolidated. Remember, that's what happens 70% of the time. And then we got above the BBC, red and falling, turned to blue and climbing, and we ran up to target and beyond. And then price always reverts to the mean. Our mean just happens to be green, and we call it the BBC, bull bear cross. And that sends us back up to the target again, which brings us back to the BBC and back to the target and back to the BBC and back to the target. And then finally we make a run all the way from this zone to the zone overhead. From 23.23 to 23.68. 2 pennies is $100. So from 23 to 68, I don't know, we'll call that 40 pennies. It's $2,000. Zone per contract traded. A $1 move. In other words, if price went from 22.93 to 23.93, that would be $5,000 per contract traded. We hit the zone, resistance, pulled back into blue and climbing, found support, back to the zone, again resistance. Notice the step line is crossing, the black line is crossing blue and climbing. So what do we expect? A pull back to the BBC. Pull back holds more often than not, but we wait to see if in fact it holds. How do we know it's holding? Because it comes down and touches it and then starts printing green candles, which gives us an opportunity to trade back up to the zone. And the last market, the euro. Here's where we opened, right at a zone. And then we got below the BBC, blue and climbing, turned to red and falling. We hit the target. Then we hit the zone. And we kept dropping. We hit this zone, consolidated. Spiked it. Pull back to the BBC. Then here's that 9:30 opening candle. First 30 minutes of the market, I don't trade and I don't issue any alerts because there's extreme volatility during the first 30-minute candle of almost every market. And so, to me, it's kind of like gambling. Michael, Valerie, they hit the ground running at 9:30 when the market's open. Many of our traders do. Many of our traders already have their goal for the day before the market's open or before 10 a.m. I'm not even ready to get it in gear. I do trade overnight. I might trade the London Open. I might be trading around midnight. It just depends upon my schedule, where I'm at, what I'm doing, what I'm thinking. I'm restless. I'm not sleepy. I can walk into my office and put on and take off some trades. There's plenty of movement overnight in the euro, in the S&P 500 E-mini, in crude, in gold. Plenty of movement, plenty of volatility. Okay. So we get a leg down and a retracement. That's how markets work. Leg, retracement. Leg, retracement. So even though we spiked up to the zone and found resistance off the 9:30 opening candle, okay, see, all of our traders who understand our methodology and strategy, they might have taken advantage of this opportunity, knowing as we approach the zone, the highest probability is that it's going to be resistance till proven otherwise. And so right before they get to that zone, they're going to take their profit and be done for the day. Right there. And comes 10 o'clock and things swing the other way. Now we're attempting to overcome the BBC, but then we have to also overcome the zone. Then we have to overcome this swing high. And honestly, I wouldn't even be too interested in trading this market until price gets up here. That requires patience. But because our methodology and strategy works across all markets and all time frames, I can either A, wait for price to get up there, or get rejected and trade short, or I can just go, scan through the markets and find one that's setting up right now, one that's providing me an opportunity right now. And that brings us all the way around the world back to the daily chart. Okay. Earlier, we talked about the fact that we had pulled back to the daily BBC. The pullback holds more often than not. So we're well off the low of the session. Where we closed today, extremely important. But just another example of pullback holds more often than not. Whether you're on the daily chart, weekly chart, monthly chart, 30-minute chart, 5-minute chart, tick chart, range chart, price always reverts to the mean. Pullback holds more often than not. The larger the time frame of the pullback you're looking at, the more reliable the fact that the pullback's going to hold. So if you're willing to do the work and show up every day, not expecting to get rich overnight, you should go here. EminiFuturesTrading.com. That's where you get your passport. It is your all-access pass to everything we do, everything we've ever done, and anything we do new in the future. Passport is lifetime membership to the live training room, to unlimited one-on-one private mentoring, teach you our strategy, and you own the indicators for life that work across all markets and all time frames. Passport holders also receive the Logic 247 alerts, the concierge trade alerts, and of course you get an invitation to the members only workshop every Thursday night, which we've done every Thursday night, except like I think a couple, on Thanksgiving, I think we take the night off. This is 2008. And once you become a passport holder, you have access to the Telegram channel where we archive every members only workshop. So once you become a member, no recurring fees, no upsells, no nonsense, nothing to buy ever again. You'll have access not only to this week's, tomorrow night's members only workshop, but you can go back and watch as many previous workshops as you would like. Recorded and archived each and every one. You won't find those on our YouTube channel. It's this afternoon broadcast that we archive on the YouTube channel. Workshop videos, those are archived in a Telegram channel we have, invite only, members only, where you have access to more workshops than you'll ever get around to watching. So with all that said, if you need to call us, 949-42-EMINI, or email us support@cfrn.net. Let's wrap it up. A good word for the day. Yesterday, we talked about having a vision for your life. When God created you and formed you in your mother's womb, He had a vision and a purpose for your life. What we talked about yesterday is, have you connected with that vision? Do you know why God created you? What purpose in His kingdom He has for you? That was yesterday. And through the power of the internet, you can go watch it if you missed it. Today we'll talk about something different. Change your thinking, change your life. We'll talk about this for a couple days. Romans 12:2. And be not conformed to this world, but be transformed by the renewing of your mind. When you think creatively, you're thinking like God, your creator. But not everybody will welcome your creative ideas. Jesus wasn't crucified because He worked miracles. He was loved and applauded for those. He was crucified for having ideas that challenged the status quo. God is the giver of great concepts, truths, and ideas. So when He gives you one, don't let anybody talk you out of it. Don't let the fear of rejection or failure kill your idea either. After all, you can't do something new and exciting if you force yourself to stay in the same old rut. Don't just work harder at the same old thing. Make a change. And the first thing you will have to change is how you think. what you listen to, and what you believe. Now, listen to these phrases. I'm not a creative person. Follow the rules. Don't ask questions. Don't be different. Color within the lines. There's only one way to do it. Don't be foolish. Think of your image. That's not logical. It's not practical. It's never been done. It can't be done. It didn't work for them. We tried that before. It's too much work. We can't afford to make a mistake. It will be too hard to administer. We don't have the time. We don't have the money. Yes, but Paul writes in Romans 12:2, be not conformed to this world, but be transformed by the renewing of your mind, that you may prove what is good and acceptable and the perfect will of God. So the word for today and tomorrow: change your thinking, change your trading, change your life. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.